morning, everybody. Welcome to 2018. It's Michael here from the Trading Institutional Order Flow thread on Forex Factory. I hope you all had a great end to 2017 and have come into 2018 full of vigor, full of life, full of belief that 2018 is going to be yours. Um, I know I certainly have. Um, I wanted to say a happy new year to everybody and to thank everyone for your support, your comments in 2017, your posting on the thread. Here's the Trading Institutional Auto Flow thread that continues to grow. It's on forexfactory.com where we hang out and share ideas. Thank you all again. I wanted to start today's video with welcoming some of the new contributors. Motai, welcome to the thread. Thank you for posting your charts and your ideas. I see you're using what a supply and demand trader would consider swear words. You're using support and I'm thinking resistance as well. They are similar but also quite different. So but welcome, and we will talk about your charts. Blaster, Happy New Year to you, sir. Okay. An old video of mine. Usually I post videos on the thread, but thank you for pointing that out to Motai. So we're going to go through some of the questions first, and then I'm going to start the year with a broad overview of the markets, the majors, which I have here, and I need to add the dollar to that. And I'm going to try and keep this list consistent for these videos for 2018. That's what I think might be more useful for everyone. And then at the end, I'm going to talk about an idea that I have to share with you guys for 2018 for any of you who's interested in that. So let's get started. I, again, don't want to keep the video too long. So Motai Blast, I think you guys were talking about the pound Aussie, so why don't we start with that? It's not on this list, but just to answer your questions. The pound Aussie, so we'll do that. So we were looking at it from a weekly perspective to start with. And it's important that for 2018 people understand the time frames and getting them in the right order as well. So looking at it from a weekly time frame, you have a little bit of demand down in here. The better demand is obviously lower because the lower you go, the better the demand. That's this area here that we're looking at. There is some here probably on a smaller time frame, and you can see prices have already begun to turn. We have created a new supply zone here, it looks like, and there is also demand down in here. So these are the weekly levels that we have right now. Obviously, there's some more supply above. I don't think there is. Oh, there is some more demand below. There are demand levels below. We've tested that one. There are a couple below as well. So this is what we've got for the weekly view. So at the moment, you are reacting off of that demand zone right there. We have supply above. If we take it down to the daily very quickly, we can see the trend that has begun. The daily is going down, and we've tested these levels. So it's looking like it's down in here. So going into, take a closer look at this trend. We have ended it as well. So shorting here is a bit of a challenge at the moment. I'm sure people would still try that, but it's probably not the greatest, and in fact the level is not that great structure wise either. So looking to short will probably be higher up in there or lower down in here still. And then looking at the 4 hour for possible entries, right? So we've got a 4 hour trend that's turned up. So looking down in here, you may want to try that drop base rally or that one below, and then there are some better levels up in here. So that's for the pound Aussie. I hope that helps, Motai. Let me just take a look at your question. Weekly support still a way for me. How do you draw support on the whole candle? So let's take a look at your chart and see if this is the weekly, is it? So that's your what? This isn't the pound, is it? Is it the pound Aussie? Let me just take a look at that weekly again. No, it's not the same market, I don't think. Or maybe I'm looking. Maybe I'm looking. Maybe I'm looking higher. Okay, this doesn't look like the pound Aussie, but I'm not sure what time frame. Oh, this looks like it's the weekly, but it's a very different view to what I have. It must be a different market. Um, but either anyway, um, so that's what we're looking at. So these levels you're talking about are supply zones. I'm guessing you're trying to. I know for support and resistance traders, it can get a bit challenging changing the terminology you use, but with time you'll get it. You'll get it. Um, so let's go to Hey T4I. Yeah, I have responded to your email. I got it. I hope you can join us soon enough. We'll see. So let's see what you got on the pound US dollar. Weekly drop, base drop has been tested. So yeah, so that level is okay. That one's better. That one's okay. Just check it hasn't been tested. In the way you draw this zone, so the pound US dollar, it's a bit tight there. You would if we go to the pound US dollar, um, so we're talking about this zone. It's a very small zone, so you wouldn't do wrong in doing that. And you can see it's already gone through it. Tightening it up like that can be because it's not necessary really. Like you pointed out, that level higher is something worth looking into. In fact, doing that is not a bad idea either. Um, and looking at the demand below, so we've got that demand below that's still worth looking into, but prices have begun to move away right now, so we probably will be forming more demand zones as we go up. Okay. Um, and going to the daily, what did you want about the daily supply zone? Now that's a very poor supply zone. That one was a better one. It's really this area, not the whole of that, because there's so many things wrong with this level. Daily supplies have been tested, so best not to look for shorts here, right? No, not necessarily. I mean, even if a zone has been tested, you still have to evaluate the zone to see if there is still the possibility of orders being left in there. Because sometimes you'll have a zone that will be tested several times. Yeah. So the daily demand zone, wait until price comes back to go long. Yep, that's how we would play it. We generally trade pullbacks with the methodology, not breakouts. I'm sure there will be the breakout methodology would have a lot of traders getting in above these highs, which is a different methodology to what we use. Doesn't mean it's wrong, doesn't mean it's right. It's just different. Yeah. So that's that one. And then the dollar, which I've been doing a lot of work in. I think I posted a dollar chart earlier, or at the end of last year, like around Christmas time, with some of my thoughts on the dollar, the big picture. So on the dollar, we have supply zone already. Yeah, it's this level. Pretty much worked. If you were trading the dollar using the dollar futures, for example, you would have had this trade because, and I know that's hindsight talk, but just so you bring it up, that level there with a little bit of a gap was a rally-based drop supply zone that prices reacted to. So your stop would have done what you wanted it to do, its job, your stop would have been above here. It's unlikely your stop would have been hit at all with this trade, so you probably would have been able to at least get some of this move, if not all of it. Now looking at the demand below, the drop base rally below, yeah, that's fine. Wait until price reaches demand. So you want to be mindful of doing the multiple time frame analysis. So this, for example, it may be demand, but it may not be a buying opportunity. It will all depend on what the bigger picture you're looking at is. If the daily is your bigger picture, then fine. Looking here, again, there are techniques and tactics that we would use on the roundtable to consider this zone, to evaluate it, to see if it's necessary to even consider entering at it. Um, but that will be for another time. So I think I got all the questions. Let's go to the charts. Let's do a quick rundown on the monthly of the few markets we've got here. Hopefully we'll get through all of them, maybe not. So for some of you who've already drawn up your charts and done your homework, this may just be a review for you. And for those of you who haven't, it may help you to keep your eyes out on these levels going into 2018. So we have that level there. That's the supply. I mean, there are ways you can draw it. You could draw it like that. It's again a small level. So and then you have that one, which again you could have drawn like that, which is again another smaller because they're single candles in the base. Um, so those are the levels for the Aussie, looking at the big picture. That's the monthly chart we're looking at for each one of these. And the Euro, the top performer for 2017. Let's see how well it performs. Most of you know, for those of you who know me, we've been bullish the Euro from down in here. We called in the room this level down in here as it was forming a few months ago now. It's all recorded, the videos are there. So that's a demand zone. That's a demand zone below, and we're still slowly going up. Obviously, the momentum going up is slowing, but who knows? It may pick up again. But those are the levels for the euro, um, and for the this is the pound US dollar. So we're looking at just the pre-Brexit levels. You could draw it that way. So just missed it there on Brexit, and looking for fresh demand below, you'd probably be best looking much lower. This is a big grind up. There isn't quality demand here right now. The demand zone below here has been just tested. It's fair enough. So that would be the way that I would look at this pair. And the New Zealand, oh, the video is getting a bit long, but I think it might be useful. I hope I'm not keeping you guys. That level there and that level there are the levels for the monthly that I'm looking at. Let's take a quick look at gold. And gold, we got that level, we got that level, and we're again grinding up through. As we've talked about, this big wick isn't a level that negates this, and even still, when once we got above it, we enticed selling into the market. We had this level, which was not a quality level because of the structure. The prices did not move away that much, but buyers are here, so gold is still shiny for a lot of people, and people have bought it down in here and are beginning to try and carry it up. Now, looking at supply above us, we've got that. So, watching gold into 2018, we'll see how far gold gets as we move up. And then a quick look at oil. Oil is sitting into supply. The trend is still strong to the upside, so we're pushing deeper and deeper into this level, which is expected. Um, Demand is way all the way down here. There is some demand here. It's not the greatest, and this is not no, this is not quality, but it's what you've got. So it might be an idea to be mindful on your entry strategies and techniques down at this level. And then we've got supply way up here, way up here. Okay, let's take a quick look at the dollar. Like we said, I posted the chart a few weeks ago now. We've been looking at these same levels for a long time. We still have them in. There's a little bit of supply in here if I just draw it out so you can see there's a little bit here. Again, it's not the greatest, but that's what we've got. We've come below these lows. See if we can get a close below this lows and the dollar may come. So far, we haven't managed to close below 91.92. So that's it, a quick broad overview that I wanted to look at. For the beginning of the year. Oh, one more, one more. I wanted to look at this one. Yeah, so this one is a lot of people have asked me about the yen is why I wanted to point it out. The yen is kind of stuck. It's, the safe haven currencies, the US dollar and the yen itself. So it's been stuck in this range. It's a low volatility range, and obviously out of low volatility will come high volatility. When that will happen, we don't know. But for now, we've got supply still hanging above. Demand, I'm not keen on that level. I'll put it in for, I know some of you are looking at it, but I'm not keen on it. And we have some that's tested and it's not all the way till down here. Obviously, getting down here would be great. Buying the US dollar down here would be fantastic. Um, but definitely this is a monthly chart. We might not be back down here for another 10 years. So guys, I'm gonna end the video. The one thing I wanted to say, I've had a lot of questions from you, different so many of you about the roundtable. Yes, it's a service that Storehouse Analytics offers where we meet weekly with the traders I've mentored personally, and we go through the charts, prepare for the trading week ahead. It's not a signal service. I'm not guaranteeing you $1 million by the end of 2018. As I said, people who are on the roundtable are people I've mentored either through the Storehouse tutorial group videos or through one-to-ones, and then they've come on board the mentoring service. Now, if you're interested in joining us weekly, I want to trial it out in the first quarter at least of 2018, where we open it up to people. It's going to be market analysis, going through the markets that you bring, that I bring, the ideas, we share them together and see if the markets are giving us any opportunities using different time sequences depending on the type of trader you are. And for those of you who've been to the webinars, it's not too dissimilar to that, but it won't be teaching sessions. Obviously, the more you're in there, you will get to learn the methodology with all its nuances. In particular, given my other set of um, skills and what I do, the mindset. Um, the mindset is very, very important. That's the most important thing for roundtable members. Again, so if you're interested in joining us for this trial period I want to see how if there's any interest in having people come into the group. At the moment, I think we're about 30 or 40 people in there. So if you are interested in joining, it's just let me know. Send me an email at storehouseanalytics@gmail.com and I'll send you the details. Okay. All right. Have a great week, everybody. Trade safe. Stay well. Take care.